Hello and welcome to another update video about silver. Yeah, silver's chart is a little bit more complex than the gold chart. We have one or two more scenarios, which makes it a little bit more difficult because the move to the upside of the October lows, it is quite ambiguous. We talk about the different scenarios and what the problems are with these scenarios. So overall, currently my assumption would still be, or the base case, that in October a wave 2 formed a low and that we're now moving up in a third wave that could take us to $30 and beyond. Yeah. Now, the problem I have now is that this move to the upside is a very clear three-wave move. That allows me to count it as follows. First scenario would be that this is a leading diagonal and this is a wave 1, this is a wave 2, wave 3, wave 4, wave 5. In this particular scenario, I would like to see a wave 5 that moves above $25.95. To be honest, in an ideal world, we would see the wave 5 reach, reach ideally sort of $27.30, maybe even, but that would be too high, probably $28.76. So we'd like to see then the fifth wave reach that 1.618 extension. Condition for that scenario is very clearly that we make another high before we break below the wave 4 low, because that would invalidate this structure. That wave 4 low is at $22.52. So that's the first scenario. The problem I have with this wave count is it's a leading diagonal. You can't really trust diagonals, and the wave 4 would be very deep. Still, though, a valid option. In the other scenario, we're dealing with some kind of a larger diagonal, and I would be looking at here a wave 1. All of this is a 1. This is a 2, and we're now moving up in wave 3, 4, 5. I don't really like that scenario so much, but it's possible. That means the wave 3 would also be an A, B, C structure than wave 4 and 5. To be honest, that would not be so far off from the gold chart. That is pretty similar to gold. Yeah. So that's another scenario. Or, and this is the short-term bearish one, we're dealing with a scenario in which this is a high B wave and we're now coming down in wave C. All of these are overall bullish scenarios, with the last one, however, being a short-term bearish one. So that means, what am I leaning to? I mean, I am leaning to this diagonal structure in white, to be honest, at the moment. But there is a very clear level to watch for the yellow count, which sends us lower, which would also be bullish, but would send us a bit lower. That's, to be honest, in line also with the gold chart, which can send us a little bit lower, but silver then would be short-term a bit more bearish. Anyway, you need to watch the gold chart to understand it. Anyway, we can only look at the levels. So it's between white and yellow, to be honest, for both these two counts, you know. And the value of this analysis will be to identify what are the levels that will distinguish between the two. So I already told you what I need to see for wave 5. Actionable would be, if we get these 5 waves, then we call that a wave 1, and I will add the next pullback zone in a wave 2, which could then be a nice pullback entry point. If those 5 waves don't show, then the support area here will be relevant again for scaling in. Two very straightforward possible actions that one could take. In the very short term, to make this wave 5 to the upside more likely, I would like to see a break above standard resistance, and standard resistance is at $25.16. So if we get a sustained break above $25.16, it's very likely that it's the fifth wave to the upside, and I already gave you the targets for that. Okay, that's my update about silver. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then check out our stocks and S&P 500 service. We cover daily the S&P, also in video updates. We also cover the Nasdaq at the moment. Also, we cover stocks like, for example, Tesla, Nvidia, PayPal, and so on. Thanks a lot for watching. Bye-bye.